Hello. Very good morning, ladies and gentlemen, and a warm welcome to all the attendants of this conference call of Kalyani Forge Limited. This conference call is regarding the Q2 financials results of the company and future prospectus of the company. Please note that this conference call is being hosted and all participants are attending remotely. This conference call shall have the following highlights about the company and forward-looking statements of the company, based on the beliefs, understanding, expectations of the company as on date. These statements presentation are with the performance of the future and growth of the company. As a reminder, our Managing Director, Mr. Virajji Kalyani, will be making presentation, and then all participants shall be given a fair time to ask questions. If any question regarding performance of the company or any such matter, that shall be answered by our MD, Mr. Virajji Kalyani. If any participant needs any assistance during the conference call, please reach out to our moderator, Mr. Rajkumar Diksangi, by signaling regarding the same. I now hand over the conference to Mr. Virajji Kalyani, Managing Director of the company. Thank you, and over to you, Mr. Virajji Kalyani.
Hello, good morning. Can you hear me, Rachna?
Yes, sir.
Okay. Good morning, everyone. Welcome to our investor analyst call for Kalyani Forge. I am Viraj Kalyani, the Managing Director and CEO of Kalyani Forge. I've been working in the company since the year 2012 and recently took over this role last year. Incidentally, this is our first investor call, so I'm sure we will get a lot of feedback from investors, shareholders, prospective investors as well. And going forward, we will definitely keep improving this practice and make it a regular affair. So thank you everyone for taking the time and joining us. I will now take you through our investor presentation. Rachna, can you confirm that the screen is visible?
Yes, sir. Yes,
okay.
visible
the entire
clearly.
slideshow is visible?
Yes, sir.
Yeah. So this is our investor presentation for Q2 FY25. Sorry, there's a typo here. It's Q2 FY25 and H1 FY25. And the theme for our year is about gaining strength, as you would have seen in our annual report recently published. These are our company stats for some of you who may be new to the company. We have been established in 1978 with around 50 years of experience in the industry. We are publicly listed on the National Stock Exchange and Bombay Stock Exchange. We have a workforce headcount of about 1,000 plus employees, and we are located in Pune, in Maharashtra, near the seaport of Mumbai, and also in the automotive hub of Pune. We have 5 plants, which are all in the same 1 kilometer radius in Korea, Bhima, and Sanaswadi outside of Pune. These are Hot Forging Division 1, Hot Forging Division 2, Machine Components Division 1, Machine Components Division 2, and Cold and Warm Forging Division. Our business segments are primarily passenger cars, trucks, industrials, agro, and turbo. About 60% of our business is in the automotive segment, which is passenger cars and trucks. And we are fairly well diversified with about 40% of business in the industrials and agro verticals. So, as I said, we are a well-diversified company, leveraging common strengths across various market segments. So as a strategy, these are the core segments that we are tracking, and we are increasing our market share in. In the truck space, this segment is high volume and has high volume, high value forgings in every truck, which makes it very attractive for us and a very good fit for the kind of products we make. It is also a large and mature market globally, and in India, it is a fast-growing market. The passenger cars as well have high volume and high value forgings in every car, including in electric vehicles. This also is a large and mature market globally, and there's a lot of headroom for growth of passenger cars in India. So we are very bullish about this space. The industrial segment has been a steady and growing market for large engines. So we are able to manufacture and sell similar products in the industrial space, especially for stationary engines, gensets, off-road vehicles, construction equipment, etc. This acts as a hedge against the cyclicality of automotive markets. At the same time, we're able to leverage our automotive standards expertise to differentiate with our competitors. In the agro space, there's a high volume market for agro engines. Again, this is a hedge against automotive cyclicality. And similarly, we leverage the automotive experience. Again, for many of you may be familiar with our products, but recently we have decided to focus on fewer product groups and increase our market share in these areas. So our main product groups are engine, driveline, and axle. Of these, the engine products obviously are the part of the ICE market, which is the existing conventional powertrain technology. But it has a very long-standing staying power, and we believe that the ICE market will continue to grow in absolute terms, even though there will be some growth in the electric and alternate fuels powertrain technologies. Then the driveline and axle products are both EV agnostic xEV products, fuel agnostic products. So we are fairly well placed to ride the wave of new powertrain technologies, as well as the existing best technologies in the market. So in the engine, we have connecting rods, crankshafts. They are very high precision products, and connecting rods have been our marquee product since inception. We are present across all market segments, and we make connecting rods of various sizes. We're also the first in India to make the fracture split connecting rod and the BS6 connecting rod, or the Euro 6 compliant connecting rod. So we are seeing good traction in this area. Our fastest growing product segment, however, is the driveline space, where we have established warm forging technology, which is a niche area, and we are amongst very few players in India who are able to produce warm forging products like outer races, tulips, inner race, and tripods. These go in the half shafts between the wheels in passenger vehicles typically in passenger vehicles. Similarly, axle products are stub axles, steering knuckles, and wheel hubs. We are growing in these areas as well. They are our third largest product group, and we have recently won some orders in all these three groups, which I will talk about in the later slide. So Kalyani Forge has a growth formula, which is very important for for achieving our long-term goals as well as our balanced scorecard targets. So number one is strong execution. Number two, business development, and number three, CapEx. And these are the three ingredients that enable and ensure growth of the company. This is the approach that we have set forth over the last 1.5 years or so. And this strategy and approach is playing out pretty positively, and we're able to see the results. So I'll take you through each of these in a bit of detail. So in terms of strong execution, we have our financial results, which are most important. In Q2, we clocked a total revenue of 62.85 crores, EBITDA of 8.29 crores, and PAT of 3.9 crores. As you can see, there is a significant growth in income, and especially in EBITDA and PAT. The main reason is we have had a favorable product mix in our sales, focusing on more profitable business. And we have also taken a lot of steps on cost control, improving operational efficiencies, lean manufacturing, and so on. So our EBITDA margin in Q2 was also at 13.2%. We have also been able to provide strong shareholder returns over the last 5 years. As you can see in the chart, we have outpaced the BSE Sensex with 180% growth compared to the market, which is at shift at 100 or at 94%. This is along with this, we have our board of directors strengthened with new board of directors following some vacancies we had for due to retirement of the earlier board members. This is helping us a lot with the right kind of guidance, industry expertise, and strategy to achieve our growth targets. Our leadership team is also strengthened with very clear org structure across our manufacturing divisions, product lines, and market segments. The leadership is also established at multiple levels so that there is a clear succession planning for the future. We have a cost reduction program in place where we're focusing on material costs, power costs, and productivity. And we have a digital shop floor program, which I will talk about in the next slide. Second ingredient of our growth is business development. And I'm happy to share with you that we have won new orders. We have won a total multi-year order book of 384 crores in H1 of FY25. So this translates to a peak annual value of 63 crores of new orders, as you can see in the graph on the right. And to give perspective, our existing forecasted order book for this year is 273 crores. So it is about 25% of the existing order book that we have won new orders. There is a continuous new business development process which is on track. So we had a similar order book winning in the previous year as well, and we are continuing this growth engine, which was an area that required a lot of boost, and we are seeing the results play out in these last few quarters. There's a focused strategy on core products and segments. So by eliminating non-core products, we're able to give more and more attention to the right set of customers, to the right locations and market segments. And therefore, we're able to fine-tune our offerings as well as consolidate our internal processes, CapEx, and all the decisions that go along with it. This has greatly simplified our operations as well. So we strongly believe in this focus strategy. Kalyani Forge also enjoys an entrenched position in the market with multi-decade relationship with OEMs. And so we are getting significant traction with our existing customers itself, while we do target new customer acquisition for our larger expansion goals. On CapEx side, this is our third ingredient for growth. As you can see, we have steadily increased our CapEx over the last 5 quarters. In Q2, our fixed assets have grown to 62.5 crores, which is almost about 8 crores of growth. We commissioned several CapEx projects in Q2FY25, particularly in plant and machinery. Our machining expansion phase 1 is complete and phase 2 is underway. So phase 1 has been for the immediate connecting rod machining lines. Phase 2 is in the driveline and axle space, where we have recently installed new plant and machinery or new cells, and this will continue in the coming quarters. We have a new 1600-ton forging press also installed last quarter, and the 4,000-ton press, which I had spoken about in an earlier AGM. This is on track for completion in Q3. This has been a long pending project which was on the back burner for almost a decade, and now we're happy to see this come to fruition, as it will unlock larger weight products, especially for the truck segment and industrial segment. Continuing on CapEx, this is just an image to help you understand how we are expanding our machining capacity. We have done relayouts for 6 old machining lines based on lean manufacturing principles. With this, we have been able to save 50% of existing shop floor space and free it up for new expansion. So these are a lot of low-hanging fruits that we are able to utilize and therefore make very judicious capital expenditure for growth. And finally, on CapEx side, we have a digital shop floor initiative where we have digitized a lot of our machine data, inspection and quality data to provide a lot of insights and analysis. The quality data helps in traceability and rapid problem solving for our internal teams as well as with customers. We have learning management and training tools, and this is enabling automation and predictive maintenance of machines. So these digitization projects are underway in collaboration with our group technology partner, Kalyani Studio, which has been a software startup founded in 2016. So we're able to leverage a lot of synergies with this company. And this is our leadership board of directors. Mrs. Rohini Kalyani is our executive chairperson. She has had a lot of decades of experience leading Kalyani Forge for over 25 years. And she's also happens to be the only female leader in the forging industry, and has been a pioneer in technology with the connecting rod, machining, fracture split technology, as well as the warm forging technology. These were all spearheaded under her leadership. So we're able to really leverage her experience on the board. Next is myself. I'm the managing director. I've already given my introduction. Mr. Gauri Shankar N. Kalyani, he's the director, non-executive and non-independent director. He is also on the board of various group companies and has a lot of experience in commercial and other businesses. In terms of independent directors, we have Mr. Ajay Tandon, who recently joined as an independent director. He has been at the helm of affairs in the Tata Group, with being the MD of Tata Autocomp and on the board of several Tata Group companies. Similarly, Mr. Jeevan Mahaldar also joined in the last quarter. He's an independent director, and he has been MD and board member in the Minda Group for several years. Before that, he had worked with Tata Ficosa and several other global companies. Mr. Abhijit Sen is also an independent director. He has been with us for several years now, and he was CFO of Citibank in his earlier career, and has a lot of financial expertise. So overall, we have a deep expertise at scale, automotive domain knowledge, global exposure, and strong strategic and leadership skills. So with that, I come to the end of our presentation. Thank you very much for your patience and for listening. I'd like to now hand over to Rachna, who will moderate for Q&A.
Thank you very much, sir, on your insightful presentation on our Kalyani Forge Limited. I would request you.
Should I close the screen share?
Yes, sir. I would request you to close the screen share. Now, all the attendees, investors, and analysts, I request them, if they have any questions in regards with our company, any processes, progresses, I request you to all put your questions on both. Kindly raise your hands, or you can use the chat box to for questioning.
We have a question from
Yes.
Mr. Sunil Kumar.
Yes.
Good morning, sir.
Yeah, good morning, Mr. Amin. How are you doing?
I am so happy. Rather, I'm elated.
Yes, thank you.
See, yesterday it was auspicious day. That was Dev Diwali.
Okay.
And you have, rather, we have all celebrated the occasion with fantastic results.
Yes, thank you. Thank you.
Yes, sir.
Surely, see, the EBITDA, you could raise it from 7.48 to 13.2 in a quarter. It's unbelievable. Absolutely unbelievable.
Yes, yes.
And I'm sure that with this rapid run, we may definitely double that figure to say 15. Is it?
Yeah, our goal is to get there. I cannot make forward-looking
I understand,
forecasts,
sir.
but definitely improving EBITDA is one of our topmost priorities.
Exactly.
And we have a clear operational strategy to increase it by improving our material costs, our power costs, and also productivity. And lastly, improving the product mix, the pricing. So these are the major levers that we are working on.
Absolutely great, sir. And I wish that Kalyani Forge may come out with quarterly turnover of 100 crores. Let's hope.
Yes, definitely. Thank you. Thank you for your
Sure.
well.
So nice.
Yeah. Thanks for participating.
Thank you, Sunil Kumar, sir. Any other analysts, investors? Sir, we have one question from Mr. Mehul Jain asking.
Yes. The question is this EBITDA margin sustainable?
Yes.
Yeah, that's a very good and important question. Of course, this is in many quarters, after many quarters, we have reached this kind of breakthrough level of EBITDA margins. We do hope to keep it sustained at this level, and we are keeping a tight watch on our costs and operations. Our target is to grow the EBITDA margin as well as our contribution margin. So the first step is to stabilize the contribution margin, which is basically our revenue minus, material costs, the direct material costs. That plays about materials are about 45 to 50% of our cost structure. So we need to, as long as we make that very sustainable, we'll be on the right path.
So we have another question from Mr. Ankur Agarwal.
Yeah. Please go ahead.
Hello, sir.
Yes, Mr. Ankur.
Hello, sir. Good set of number. क्या ये नंबर्स आगे रिफ्लेक्ट होंगे और जो आपका टॉप लाइन है इसमें ऑटो और नॉन ऑटो का क्या कंट्रीब्यूशन है?
Auto or non-auto is fairly well balanced. Auto segment is about 60% of our revenues, and 40% is the industrial segment, non-auto segment.
किस सेगमेंट में मार्जिन्स ज्यादा रहते हैं बॉस?
It depends based on the product as well. So if it is a critical product, margins are better. If it has more value addition, machining, ready to assemble products have better margins.
At present जो कंपनी का एसेट्स वगैरह है उसके हिसाब से टॉप लाइन 3-4 साल में क्या टॉप लाइन हम प्रोजेक्ट कर सकते हैं?
We have a target of growing our top line, doubling our top line over the next few years. I cannot give an exact forecast.
Not exact, but less कंपनियां कोई इंटरनल वो होता है कि अगले 4-5 साल में हमें यहाँ जाना है और इस तरीके से मार्जिन्स को मेंटेन करना है?
Yes. So our long-term target is to double the revenues to about 500 crores and increase our EBITDA margin to 15%.
जो पेंस के दिन थे पिछले 3-4 साल से जो पेंस थे वो आई थिंक आपके हिसाब से वो खत्म हो गए?
Yes, most of our legacy issues or any sort of areas that needed a lot of improvement, those are done. Those are resolved. So we are now focusing on next level of improvement, next level of growth, new business in multiple product lines.
Okay, thank you.
Thank you. Thank you. There's a follow-up question, Mr. Mehul.
Yes. Yes, sir. Thank you, Mr. Ankur Agarwal. There is a follow-up question from Mr. Mehul Jain. What's your future capex plan?
Our capex plan we have been planning over a 3 to 4 year cycle. Last year we did capex of around 13 crores. This year we have planned a significantly larger outlay, around 25 to 30 crores. Some of it is based on the business projections that we are getting from our customers. Yeah. Okay, next question is from Del.
Yes. Sir, I would request if you can disclose your name. However, the question is, what are the reasons for such good operating margins and plans to sustain them?
Yes, as I've already answered this question, the operating margins have improved based on better price and product mix, as well as improving our operational efficiencies and cost reduction measures. We are working on sustaining this, and the approach is to focus on largely on our material cost contribution margins first, and then achieving the rest. Yeah, thank you, Mr. Kamaldeep Singh, for your question.
Thank you, sir.
In terms of sales target for this and next FY and how we are planning to increase sales, I won't disclose our exact targets for each year as we don't make forward-looking statements. But I can elaborate how we are planning to increase sales. As I have shown in my presentation, we have a focused strategy on 3 product segments, that is engine, driveline, and axle. We are working closely with our existing customers, and we have received a record number of new orders, around 62 crores of peak annual orders. We have won in H1 of FY25. So this is the effort that we are continuing, and we have a 3-pronged formula for growth, which is strong execution, business development, and capex. On full capacity, your next question is on full capacity, how much sales are possible, and capacity utilization currently, and targets for this and next FY. Yes, thank you for your question. Again, capacity is very, very important in the forging industry. It's also very expensive. So we must be very judicious in allocating capacity to the right type of business. So currently in our forging plants, our utilization is fairly low. And in our machining plants, our utilization is much higher. This is because in our forging plants, we had to phase out some non-profitable business and make room for better business from our existing customers. And there's also our efforts are to work on upgrading our forging machinery, reconditioning, modernizing, and so on. So we don't need additional capacity in our forging side, but machining side, we will be spending in terms of a new capacity based on every new business order or visibility that we get.
Thank you, sir. Moving ahead, we have some question from Ankur Agarwal again.
Yes, please go ahead.
बस ये डेप्ट अभी इसी लेवल पे मेंटेन रहेगा या इसमें कैपेक्स हो चुका है और रिडक्शन का आगे कुछ प्लान है?
हमारा डेट अभी it's maintained at the current level. We have a lot more headroom to take on more debt because our debt to equity ratio is fairly low.
Okay.
So we may take on some additional debt, but our general approach is about 75% funding of capex, 75% from debt and 25% by internal accruals.
क्या कैपेक्स है इस बैलेंस 6 महीने में और आगे 1 साल में?
I can't give an exact number, but this year's full year plan was around 25 to 30 crores.
And next year?
Next year, I cannot give the numbers yet because we have to, we are awaiting finalizing and getting the board approval on the same. So probably by next quarter, we'll be able to give an update on this.
Asset sale ratio क्या रहता है बॉस हमारे वर्टिकल में?
Yeah, asset to sales ratio is very important. Generally, it's 0.5 asset to sales.
0.5. Okay.
Yeah. So
It is too low.
for example, 1 crore of asset will generate 2 crores of sales.
Oh, 2 times. Okay.
Yes, yes. So asset divided by sales is 0.5 or sales divided by assets is 2 times.
Okay.
Again, that's a very good question, and I want to elaborate that the ratio for Kalyani Forge is quite low, which means our asset value is very low currently, and that's why we are able to take on more capex to enable the growth.
Okay. तो जो हमारा इंडस्ट्री है इसके अंदर ऑर्डर बुक पे काम चलता है या रेगुलर वर्किंग रहती है या ये होता है कि अगले 1 साल का ऑर्डर बुक है या 2 साल का ऑर्डर बुक है इस तरह से कुछ रहता है?
हाँ, again, that's a very important question. Order book is typically given for a particular program by the OEM. So they have a start of production and end of production plan, which is over, could be 5 years or 10 years. So when they give an order, it's an order for 5 to 10 years.
Okay. तो then current order book क्या है?
Current order book, our forecast is about 270 crores for this year.
Okay, that's good. Okay, thank you. That's all from my side.
Thank you, Ankurji.
Thank you.
Yes.
So, one more question in the chat box.
Yeah.
Asking, can we share capacity utilization in numbers and targets?
Yeah, capacity utilization. I can't give an exact number right now. I'll give you a ballpark. In the forging side, we have about 50% capacity utilization. In the machining side, we have about 80%, or 75 to 80% capacity utilization.
Listen.
And our targets are to get to, in the forging side, to get to 70% utilization in the coming year. There's one more question from Mr. Mehul Jain. How much company spends on new product development? Yeah, that's a good question. I honestly don't have the numbers at my fingertips right now. We will get back to you on this. But we have a pretty significant outlay for new product development, and it's based on the outlook from our customers. We are seeing some certain products are undergoing design changes, and so we proactively work on those. And for new business where we have received orders from our customers, that's part of our regular new product development activities. So it is a pretty significant spend as well as effort that we put on it.
Thank you, sir. So we have one question from Ankur Agarwal. Sir, asking now, management concall is every quarter?
Yes, Mr. Agarwal, we will make this a regular affair, and we will try to ensure we have a call at least once a quarter. And it's nice to see the participation of shareholders and the investor community.
So we are welcoming one more question. Can we share sales CAGR for this and next 2 financial years?
No, unfortunately, we cannot give this kind of a prediction on the sales CAGR. Of course, it depends. We have our internal targets in place for growing the top line as well as bottom line. We have a plan up to FY27, an annual sales plan, and we are working on the strategy is also in place for that, and we are executing on the same.
Thank you, sir. We hope that all attendees are getting satisfactory answers. And if they have any more questions, we welcome them on.
If some of you have joined later on this call, we will be sharing the presentation and the transcript of the call as well.
So, with the permission of all attendees and our managing director, I thank you all the participants and put forward to end this meeting. If there are no questions, any comments? Yeah, we have.
There's one last comment from Mr. Amin.
Yes.
So, sir, it was a fantastic meet. Wonderful.
Thank you. Thank you.
And
Thank you
great going. And see you every quarter. Happiest time forever.
Yes, definitely. This is very encouraging. And look forward to interacting with all of you next quarter. Thank you, Mr. Amin, as well.
Thank you, sir.
Okay, thank you, everyone. Thank you to all the participants for this interactive session. We look forward to participating and engaging with you in the coming quarters. You can be in touch for any further follow-up questions with our company secretary, Mrs. Rachna Agarwal. Thank you and have a nice day.
Thank you all participants. We will be posting this recording as well as transcript on the stock exchanges shortly. And looking forward for your support and encouragement as always. Thank you all. And with this note, we are ending this meeting. Thank you so much.